All right, Shreya's a very warm welcome. I'm Devang, and I welcome you back to my channel. First of all, I hope you're fresh. I hope you're rejuvenated from the big global sell-off that we witnessed in the last week. Weak markets overall in the entire world. So I hope now we're past that, and now we can discuss about what we can expect in the global markets in the coming weeks. First of all, if you're new to this channel, please make sure you like, subscribe to this channel, comment, and share our videos. That would mean a lot to us. Secondly, thank you so much for helping the TFA YouTube channel reach 20,000 subscribers. That means a lot to us. Thirdly, if you want to get in touch with me, I'm going to put my links in the description below. So Instagram at Devang Mehra, and I'm going to put my email IDs below for professional work. So I'll tell you how this video will be structured. We'll talk about the macroeconomic events that are scheduled in the coming week, because I personally believe it's a lot about macros that happen in the market, and technicals are generally based upon that. So for example, a couple of weeks back when the markets were consolidating and the Fed chairman announced that the tapering would be postponed, Monday after the Fed's Friday policy meeting, Monday markets just went ravishing higher. So if you know what macros are, what are the expectations like in the market, you can benefit from these when the markets move in that direction and when the markets respect you. So first, let's talk about the macros, and then we'll talk about the intraday view, etc., the technical language that you have here come for. First of all, in the macro structure that I have for you, the foreign portfolio investors have been net buyers in the market for 2 consecutive months now. That's a very good signal. The FPIs this month have put in about 26,517 crore in the market, and this is debt plus equity, obviously. And this figure is in addition to the August inflows, which were of 16,459 crores. Now that's a very good thing. Try to understand what's really happening. When the FPIs are putting money in the market, they are looking beyond the short-term challenges. They are looking at the long-term growth, long-term investment prospects and opportunities that are available in India. So don't think of it that FPIs have put money, let's buy tomorrow. It's not like that. It's a long-term picture, seems rosy still for the bigger money, for the smarter money. This also is attributed, I would say that way, improving macros in India. If you read the data which came out last month of inflation, CPI, WPI, the PMIs, if you have read the IIPs, you've seen how the economy is expanding. So I think that is something that is adding to the confidence of the big money. At the same time, this also gives us an indication that they are slowly dropping their cautious view of the Indian markets, their cautious approach of the Indian markets. Because if you look at the global markets like America, especially like China has seen a lot of pressure in the last couple of weeks or months, this last month. The reason is, first of all that China mess that happened in Hong Kong, etc. The other one is poor retail sales data in China, poor inflation in China. So there was a lot of pressure on China on slowdown concerns. At the same time, a lot of economists are also looking at America at plateauing its growth. So leaving aside all the global expectations that big investment banks have, India looks resilient still. In the last 2 months, India has gone from 16,000 to 18,000. So India is quite resilient. And let's not forget, markets discount information. So what we're seeing right now is something what big money is expecting in the couple of months. So that is one thing. Secondly, FPIs in India again continue to buy at the top of their emerging market spree. What I mean by that is they have put money in India. It's the highest in the emerging market. So they put money in South Korea, about $884 million. They put money in Thailand at the second number at $338 million. And they put money in Indonesia at $305 million. So India is their top investment option. Number 2, LIC is coming. It's coming. One of the biggest, I think, IPOs before LIC was SBI Cards. Remember one thing about IPOs, the bigger is the IPO, the bigger is the money raised. It's going to give you less listing gains. So for people who come for listing gains, remember that. The other thing is LIC, if you haven't read it, I'm going to read it out to you. LIC is all set to file its red herring prospectus, the draft prospectus, in early next month with SEBI. And I personally believe that LIC should be listed by the end of this financial year. Why do I say that? Is because the government has to meet its it has to meet its disinvestment targets. So they have a disinvestment target of 1.75 lakh crores. I've written everything down. I don't want to mess around with the figures, so I'm sorry if I started in the middle. But the government wants to meet its disinvestment target of 1.75 lakh crore by the end of this financial year. And believe it or not, they only raised 9,110 crores, so 9,110 crores. And this has also just come through a minority stake sale in the PSU that you've seen earlier in these last couple of months, and by the sale of the specified undertaking of Unit Trust of India in Axis Bank. So just 9,110 crores have been raised from disinvestment. So a big IPO or a big something is required. So I think LIC has to get listed to meet that target. Otherwise, it's going to look very bad on the finance ministry. So that is something that you all should be excited about. I think everyone's going to put some money in LIC. So let's see how that goes. These were two things that I wanted to discuss on the big macro fronts. This week, why the global markets. If I show you the global markets, let me just show you the charts of America so that we can touch base on what's really happening. So if you see the charts of America, you've seen that somewhere around 31st of August, approximately, American markets started to plateau. Now, what happened was the first Friday, I think it was 1st of September, the non-farm payroll data came out, and that was very, very bad. It was very, very poorer than expectations. So if I can show you on investing.com, I think that'll make a lot of sense. Non-farm payroll investing. Just try to see, let me just connect the dots. And I think things will be very, very simple for you, because I'll speak too fast and I want everyone to follow with me. Now, non-farm payroll basically means what is the employment in the private sector other than farming. And this was around 235,000. So only 235,000, which is 2.35 lakh jobs were added. However, the forecast was 7.5 lakh, and previous month it was 1.053 lakh. So that was a very big letdown. So after this data was published, you have seen that the markets have not really performed. You did get intraday kind of buys, but overall the markets have plateaued, or the markets have shown some pressure. I'm not giving any investment idea or any indication, but I'm just telling you what has already happened. And this was also on the rise of the concerns over the US debt ceiling crisis. I'm going to talk about that a little bit later in my voice notes. But that was one thing. Number two, bond yields. We talked about that. Bond yields, dollar index continue to rise further, and crude oil has been going up and up and up and up. And I think you must have seen even Reliance, because of crude, has been doing very, very well. If I show you the last 1 month returns in Reliance, I think you'll be happy to see what Reliance has done. This is the 1 month candle of Reliance. So you can see from 22.55, it's gone up all the way till 25.25. So good 300-point jump has come in Reliance. And I would say most of it is on the back of crude. Crude oil in the last 1 month has gone up about 9.28%, which is around $6.50 per barrel. So that is another one thing which does cause a lot of concern to our markets. And that is something I think you're already aware. So what are the events this week, right? What are the events this week? Number one, you have the RBI monetary policy. RBI monetary policy is scheduled for 8th of October, which is I think the Friday. So by every RBI policies happen on the bi-monthly schedule. So I don't think the repo rate is going to go up again this week. I don't think the experts are expecting that. I do remember that last policy meeting that was there was not a unanimous decision on the interest rates. When I say unanimous decision, so for example, if 10 members are on the MPC and voting, 10 on 10 were not in favor of. So if there are 10 members in the MPC, I'm giving an example. So unanimous means all 10 are saying don't increase the repo rate. So in the last policy meeting, there were a couple of members who said that let us look at increasing repo rates. But I don't think it will be done this time as well. The reason is because still inflation is back in the 2 to 6% band, which is set by the RBI. IIP is doing well. We've seen a very good rise in the PMI on the services front. I'll talk about that in a little bit. So I think all the macros are doing good. So RBI can easily maintain status quo this time. At the same time, they can maintain accommodative stance for growth, and they can continue and delay this decision for the next meeting, or I would say in the next year. So that does make sense. So probably it will be a non-event, but always make sure you listen to the commentary of the RBI governor if any additional measures are being introduced, anything's been taken away. So that is very, very important. So Friday, October 8 will be a very crucial end to the week on account of Mr. Das addressing the entire country on the back of RBI bi-monthly policy meeting. The other thing that is very important is kicking off the quarter 2 earnings. Quarter 2 earnings, so as per SEBI regulations, every listed company has to post quarterly earnings. We will again kickstart on October 8th, which is Friday once again, and this will be done by TCS. So now see, as per Dow theory principle number 4, all indices must confirm each other. Similarly, if IT companies post good earnings, that gives you a very good guidance for the entire industry. So everyone will have eyes on that. So obviously, you will understand what the earnings are and the impact on Monday itself, because TCS generally posts earnings after market. So this is a very, very important day. Every BTST kind of trade on Friday will depend upon these two instances. So keep an eye on that. And I'll tell you very, very honestly, if you have been following me for the last couple of months or years on my TFA channel, I've always told you one thing: IT companies always rise before the earnings, and after the earnings, they start to become sideways or they start to become correct. So if I can show you one very simple example, please remember these points. As I said, come to my channel to learn. We will get trade ideas on my Telegram channel, but please come to my channel to learn. So for example, IT rally that came up, earnings were announced, IT dropped. Another example over here, IT earnings were announced, rally, after that it dropped. Another example over here, IT rally, when the earnings are announced, IT dropped. Now the different style of story is ITs have already been correcting now for the last couple of weeks, and now the IT earnings are coming. So let us observe. I will give you some guidance on that by the end of the week. Thirdly, the services PMI data is also expected this week. It's very, very important. All these macro indicators are very, very important. Manufacturing services PMI data, very, very important. So anything above 50 on the PMI means the country is expanding. And after 4 months, I think, of a break of poor PMI data, last month was an exceptionally good service PMI data. And last month, the IHS market PMI services was 56.7 as against 45.4. That was a very big expansion and very good beating of the estimate. So what we have to see this week is the market beating estimates, or will we go back again below 50? Because that will be a negative thing. So please make sure you observe that. And finally, that's all about it actually. We'll have to observe China. Everything that's happening in Hong Kong and China has been creating a big impact on India, and we do see that. So let's just keep an eye on that as well. So these were some macro tools that I had planned for you, which I think are important. I don't think anything else is we have to keep an eye on. Auto sales has already been done and dusted, so that's already been impacted in. And let's get on with the technical view of Nifty now. Let's not waste too much of your time on Sunday. So you can see, very clearly, we talked about a lot of things on the live market. So please make sure you're on my Telegram channel for live commentary, etc., which is TFA Investments. That's my Telegram channel. So Himalaya and I are very active on that front. The thing that we talked to you about was this. I told you that please observe the closing of Nifty and Nifty Bank. And I think it'll be very, very clear in Nifty Bank. Nifty Bank has maintained the 20 MA. And 20 MA is a very, very strong support or resistance for the market when the markets are trending. And I've also talked about this again and again and time after time, that the markets on a bigger chart, like a 1 day chart or a 1 week chart, have multiple support over here, etc. So even if they come down on intraday front, these levels become very, very good buying opportunities. And that's exactly what has happened. So please make sure you are viewing these videos, not just today's video, but something in series. So you know what the view has been like and what are my expectations on the market, etc. Because I can't cover everything in today's video. Everything is just coming in continuation. So what I'm trying to say is, even in Nifty, I've talked about this, unless until 17,400 starts to break, the pressure is not really coming in. Anything coming in is a buying opportunity. DI is buying massive quantity. Smart money buying massive quantity. So any fall that comes in the market is a very good buy opportunity. So we've discussed about all these things in last week's video. Now this week, it's very, very important. Please understand that. Yes, I have closed below 20 MA on Nifty marginally. Number one, I can give that benefit of doubt. Number two, if tomorrow I close above that, again, we are fine. We are totally fine. But if I start to close for a day or two below 20 MA, then obviously the journey towards the lower end of the band starts. But let me come to the 15-minute chart to give you a simple intraday view. Please understand, even if markets come down for some odd reason, 17,400, 300, they are very strong supports. So they have to break for the markets to come down. The other thing I want you to understand, I think We've been talking about this for a very, very long time. And I've talked about, given a reference of GAN as well, the longer is the consolidation, the bigger are the buildings that are erected. So we got a good 3 to 4 month consolidation here and a big building erected. So obviously after a 2 month rally, you will see some kind of consolidation, some kind of partial distribution. But that does not mean you go aggressive short in the market unless until market gives you reason to. That's point number one. Point number two is it's possible that for the next 1 week or so, till the RBI commentary comes out, we can stay in the range of 17,500 and 17,950 levels. It's because markets will look for some trigger to expand or to contract. So it could be the October 8 results of TCS. It could be the RBI policy. It could be the outlook of the RBI governor. So I personally think, markets should stay within the range and we should plan accordingly. That's number one. Maybe it stays within the range for even a longer period of time because already we've expanded quite a lot. The other thing is on intraday chart. Now let's come to the intraday view. You always think I'm never going to come to that because I speak too much, but I think everyone loves and something or the other you can always capture what I speak. First thing, try to understand markets have come down, right? That's number one. On the intraday view, markets have come down, but on the bigger chart, you are still okay. What that means is, number one, you got a range here. That's something very simple. So for example, let us say market opens flat within the range of something and then it comes down. You can easily make money by going short. And my idea would be whenever you go short in the market in the current scenario, do it for 40 minutes, 50 minutes, 1 hour, not above that, because still the bigger picture says you're fine. So 17.4, 17.350, they become massive, massive buying opportunities. If you get reason to buy there, always have a stop loss. I can say anything I want, but make sure you always have a stop loss. So I'll guide you all that in the Telegram channel. But I think, looking at the global markets, it closed about 100 points higher, and even American markets have gone up 500 points. So our view eventually has been doing fine. I also talked about NASDAQ, kind of forming a low, a very crucial low at the levels that it is on right now. So that is all making sense. American VIX falling down 9%. Everything makes sense now. So we will see in this week, and maybe my analysis can be corroborated by everything that we've done. So tomorrow, if the market, let's say, open in this range, if it goes down, you can go short. If it can go up, you'll go long. That's all is fine. The first target will obviously come at the gap filling at 17,600. But looking at the current market, I don't think it'll open in this range. I'll be very simple with you. I don't want to fabricate things. I think it's going to open somewhere on the gap upside. So if, let us say, the market opens here, what do I personally expect? This channel is about what I personally expect, not giving you, fantasies or false hopes. I personally think if the market opens gap up, because we've seen a fall, the first candle, 15-minute candle, I think will look like a hammer. It will look like a hammer, which means that even if it opens gap up, I think it's going to come down a little bit, test these levels, and then again go back up. So if you haven't bought anything on the gap up, it obviously means that the markets are holding lows. So a good buying opportunity can come in when the markets come over these areas to retest. If you see some reason to buy there, have a small stop loss, but always have a stop loss that you can always buy. You can always buy. But I personally think the first candle will look something like that unless until it opens a very big gap up. So if small gap up happens like 70, 80 points, this would mean that shorts are still somewhat intact. People who want short from these levels, they will still be intact. That is why the first candle will look something like a hammer. But if it's a very, very big gap up, then it could be even a significant rally that continues on the upside in one single go. So that can also be a possibility. So keep that point in mind, but that it doesn't look like it's going to be very, very big 150 or 200 point gap up. So I think if you open a gap up, it's going to be a volatile market to up market. So it'll be like sideways, slowly volatile up. Why? Because markets have been getting a lot of resistance levels from the upper zone. So whenever you come to these levels, they'll hit and come down, they'll come here, they'll come down, they'll come here, they'll come down, etc. You get the idea. So plan accordingly. I would say plan small quantities, considering this view in mind. This is my view. We'll talk about how it went tomorrow, but plan small because let the market show where it wants to go, because still there is confusion. Do I want to go back up or do I want to go down? Do I want to distribute? So still there is confusion. Talking about Bank Nifty, I hope it is clear. Talking about Bank Nifty, it is exactly same. You have massive supports at all these levels. If I show you a 1 hour picture, you can see this area was a massive gap filling and it's taken support over there. So unless until markets now start to break lows, it's not going to become an aggressive sell-off scenario. So keep that point in mind. So I think even Bank Nifty becomes on a good gap of opening. Target number one, yes, does become 37, 500, etc., 400, etc., but it does become sideways or volatile day to up because of the massive levels of resistance coming in, because the markets have corrected 2000 points, or sorry, 1500 points in the last couple of days. So it will hit a lot of resistance levels. So that will, change the picture. I hope that that view is clear. So I'm going to keep that perspective in mind. Uh, as I said, aggressive selling only will come in if the market goes below these levels. If they start to trade below 36,900 levels, that's the only time when the aggressive selling in the markets will start. So just keep these views in mind. I think Bank Nifty has a very, very strong and promising trend line somewhere over here. So if this trend line comes on the chart, I think that's a good buying opportunity. Small risk rewards, but a good buying opportunity. Same thing is in a matter with Nifty. If you look at the charts of Nifty, a good trend line even comes somewhere over here. So if for some reason after a gap up market does come down, if it doesn't stop at 17,500 level, it starts to come down. If you get these levels in the future, I think they're good buying opportunities because the overall trend of the market is still up. So that's my view. I think it's very clear. It's something I'm very simple about. Just to conclude, unless until market break lows of today, or unless until market consolidate towards near today's lows on Friday's lows, I think markets are still okay. They're still resilient, and bull markets have fast and furious corrections. So just that's the view. Hope you enjoyed the video. Anything you have, put it in the comments. Please like, share, subscribe, and I'll see you on Monday morning live market updates and obviously on live market commentary. Thanks, guys. Have a good night.